pleasure to be a guest speaker here today to share the view about mortgages in the UK for non-UK citizens. First of all, I would like to introduce myself. My name is Yuan. I'm the regional manager at Oceantide Wealth Limited. I have been working in the mortgage industry in the UK for over 13 and going to 14 years now. For the first part of my career, I worked at a UK building society as a mortgage advisor for 6 years. I mainly at the time assisting all of the English British citizen to get a mortgage for getting a property either for self-use or for buy-to-let investment purpose. In 2013, I joined a Hong Kong bank. Probably most of you will be very familiar, the Bank of East Asia in the UK, and I worked there for 7 years. Since then, I expanded my experience and knowledge to help the overseas clients to get a mortgage in the UK. And last year, I was very honored to join Oceantide Wealth Limited. The reason that I decided to change my job is because I found working for a single lender, normally the products available are quite limited. There are so many people who have different background, different requirements, and they want a different mortgage products. However, the single lender could only provide certain products. So I now work for a broker company, which I have access to the whole UK mortgage lenders, and I can access to all of their products. Before I joined Oceantide, I actually did massive research to see which boat I want to get on. Oceantide, our company, is a very well-established broker company. It was established in 2005. My colleagues are all very experienced mortgage advisors who previously worked for all the well-known players, you name it, HSBC, Bank of China, and obviously myself working for Bank of East Asia before. So we really understand our customers' needs and we understand the lenders' underwriting requirements. We are the bridge to make things happen, to make the deal happen. Our company last year has achieved a total amount of 140 million loan completion with the average success rate of 99%. This again just proves our knowledge and experience and our relationships with the lenders. We know their underwriting and we always recommend the right customers to their lender to fit their risk appetite. Okay, that's the introduction part over. Let's get to the main part. Some people might have heard the nightmare to get a mortgage in the UK, the paperwork, the process, the valuation, etc. However, the benefit of the mortgages we cannot ignore. So firstly, you will use the bank's money to leverage the risk. The bank will instruct the legal and valuation surveyor to ensure the property that you wish to purchase is a good security. So in another word, if you borrow from the bank, getting the mortgage with the bank is willing to lend and you can't go wrong with your purchase. Secondly, when the bank grants the mortgage to you, it will ensure the mortgage is affordable. In other words, they will ensure the rental income is sufficient to cover the monthly mortgage repayment. So you don't really need to take money out of your own pocket to support mortgage payment each month, unless obviously there will be a rental void or major repair has drained your rental income. Lastly, people do have this misunderstanding. They're thinking they are not British citizen, they're not holding the British passport, hence they are not qualified to get a mortgage in the UK. No, actually, even if you don't have UK passport, you don't have any credit footprint in the UK, you still be able to get a mortgage in the UK. However, the lenders do have different criteria for the borrowers comparing to the British local borrowers, and the criteria is different and the mortgage product will be different as well. So if you don't need to be a UK citizen, who can apply the mortgage then? There are 4 sectors I would like to explain. First of all, it's the income requirement from the borrower. Most lenders would only consider if the borrower's annual income, is over £25,000 a year, please bear that in mind that £25,000 a year is the minimum income requirement. The higher income you have, the better mortgage rate you might be able to get. So normally, if you want to get a good mortgage rate, your income need to be over at least £75,000 a year in order for you to get a better interest rate. And you will also have a wide choice of the lenders as well. But still, some lenders require the borrowers to place deposit with them in order to get a good interest rate. Secondly, is the requirement for security. I've come across so many times that people come and tell me how much they earn a year, and they want me to advise how much they can borrow. Unfortunately, we can't advise. We need to know which one you're buying. The reason being is because the banks, they don't lend to any properties. Different banks have their own risk appetite or property appetite. For example, some lenders, they do not like the property are too small. The studios they don't like. For example, they don't like lend to the properties that are too lower value. For example, under £300,000, they don't like. Some lenders, they don't like the properties is located in a high building over 10 stories, they don't like, or it is above a commercial unit, etc., etc. So we need to understand which one you're buying and together with your income, and then I will be able to give a very brief advice on how much you'll be able to borrow. Thirdly, when we applied mortgage, the lender always ask for the proof of fund that you put down for the deposit. So they want to make sure, some of them want to make sure that you already have this amount of deposit in the UK bank account for over certain period, normally 3 months. So again, you must make sure that the source of deposit is traceable and provable. It can be gifted deposit from family member. Lenders have different requirements as well. Lastly, it is a very interesting one. We start to see more and more lenders really care about the borrower's existing financial commitments. For example, do you have any tax loans in Hong Kong? Do you have any personal loans? Have you got existing mortgages, etc.? It's very interesting because normally we will think the buy-to-let mortgage is investment mortgage. You have rental income to cover the monthly cost. Why the lender would care so much about your monthly personal commitment? Yes, again, the banks will have the different affordability assessment system in place. They sometimes also will apply stress test, so they will work out in the worst scenario, the property you want to buy do not receive any rental income, and you have all the debts in Hong Kong you need to afford. Can you afford the new mortgage? So that's the reason why. So talk about who can apply. Now I would like to introduce the 2 different methods for you to repay the mortgage in the UK. The first one is called capital and interest repayment. So for the capital and interest repayment, give an example. If you borrow £100,000 over 25 years and you choose to repay in capital and interest repayment, so that in the 25 years, the mortgage will be fully repaid, so you don't owe any bank, don't owe bank any money. The second one is called interest only. Again, we use the example, if you borrow £100,000 over 25 years period, during the 25 years time, you only pay the interest part of the mortgage. And by the end of the mortgage term, you still owe bank £100,000. You could either pay it by sell the property, or you can pay it with your own savings. Normally, if you go for the interest only mortgage, the lender will ask, what is your exit strategy? So how do you plan to repay this loan? There are different types of mortgage products. So when we provide the proposal to our clients, sometimes we do receive feedback. People find it's very difficult to understand the types of products. Normally there are 2 mortgage products in the UK, although I put 3 and I'll explain further. The first one is called a fixed rate. So by the name of it, it's interest rate is fixed, which means your monthly repayment is fixed. So it's regardless what changes in the market. Even if the market interest rate goes really high onto the roof or really low, really cheap, it doesn't really matter to you if you choose the fixed rate mortgage. The second one is called a tracker. Normally the track products, it tracks the Bank of England base rate. So if the bank rate goes up, your monthly repayment will go up. It's a variable rate. Both fixed rate and a track rate, the product will have a product life. So you will hear a lot of banks will say, oh, 5-year mortgage, 5-year fixed rate mortgage product, 2-year track rate. That means the product life is for 5 years or 2 years. By the end of the product term, if you do not do anything, or if you don't tell the bank what you plan to do, your mortgage will be automatically go on to the standard variable rate, which is the most expensive rate now these lenders will provide. At the moment, it's probably talk about 5%, 5.5% interest rate. So do not let your mortgage go on the standard variable rate. Contact the bank 3 to 4 months before the product finishes. Okay, next I have 3 cases to share. But before I start sharing the cases, I would like to draw your attention on the expectations for the loan to value and interest rate these days. Because before the COVID-19, it is very common, it was really common for the customers to get a 75% loan to value buy-to-let mortgage at really cheap interest rate. We talk about probably this rate is lower even than 2%. However, since March this year, I think probably some of you, if you really into the market, and you probably already experienced the difficulty to get the similar type of product. The high LTV mortgage products were withdrawn. The interest rate has been increased despite the Bank of England base rate was only 0.1%. And recently I've been asked so many times because last week Boris Johnson made a promise to introduce a 95% loan to value mortgage for the first time buyer. A lot of people asking me whether this would apply to them. Very unfortunately, this was only at the proposal stage, and even if it's going to happen, this 95% LTV only apply to the UK citizens, so it doesn't apply to the overseas buyers. Okay, so the 3 cases I'm going to share with you is a more realistic life story I want to share with you. Of course, there are some customers can get a lot of better interest rate, and I do many of them, but their income is more than the income that I explain in these cases. So the first case I would like to share with you, this customer is a Hong Kong resident, wants to purchase a London new build apartment at £600,000. Customer's annual income is 70,000. Remember at the very beginning, I said if you want to get a good interest rate, your income have to over 75,000. So this customer is just below the £75,000 income. The customer doesn't own any properties in or outside the UK, nor own any property in Hong Kong. The customer does not have any financial commitments. So the products that we managed to get the customer is a tracker rate 2.99%, and the loan to value is 65%, which is the highest I would say the highest interest rate loan to value that we could obtain customer for his scenario. The monthly rent is over £2,300, and the monthly mortgage repayment, this is the interest only, is £970, which means the customer will have a lot of rental surplus to cover in the future if they want to repay mortgage a bit quicker, pay off the capital a bit quicker. So the second case, the applicant wants to purchase a new build apartment outside London for £250,000. The applicant's annual income is £25,000, and they don't own any property. He doesn't own any property, and he doesn't have any financial commitments. So still, again, we managed to get him a 65% loan to value mortgage at a 2.99% track rate. This lender is different to the lender in case 1. In case 1, that lender does not cannot lend to anybody whose income is under £50,000, but we still managed to get the customer in the case 2, whose income is 25,000. We still managed to get a really good interest rate, 2.99%. The monthly rent is 1,200, and the monthly interest only payment is £405. So again, this customer has a lot of rental surplus to put aside for their own use. The last case is a very interesting one, and we come across very often. It's a joint name borrowers who want to purchase not a new build but existing 二手樓啦 apartment outside London for £250,000. Well, this deal they want to complete quick because some of those properties you probably will see in the market they are repossession. So the bank will ensure the seller want to ensure the property is sold quick, and then the buyers want to get the property quick because this is a really bargain deal maybe for them. So they need to complete purchase in 28 days. The customer's combined annual income is £25,000, which is below most of the lenders' requirement. Most lenders require the single income have to be over £25,000, and the applicants do not own any properties in the UK or outside the UK. So again, we managed to get a 65% loan to value for this customer, and the interest rate is 5.99% is a fixed rate. Okay, some people might think, wow, that's very expensive, but I have to say that these days for a lender to grant a mortgage from beginning to the end, it takes minimum 3 months. Some of them can take even half a year, just because of the workload and the business volume the lenders these days face. So not many lenders could provide a very time efficient service and product unless it's a bridging finance. You probably have heard of bridging finance. Is a 12-month long term. They probably charge 1% monthly interest, and they will charge you very expensive product fee as well. So for this customer, we will still manage to get them a reasonably cheap 5.99% product. Again, the monthly rent is more than sufficient to cover the monthly repayment. Okay, so these are the 3 cases that I would like to share with you. Next, I want to very quickly go through the mortgage application process. So how do we normally proceed with a mortgage? There are 3 stages. The first stage is the initial stage. So we will talk to you to understand your background, understand what is your requirement, and we'll package everything together, speak to the lender, and get you the agreement in principle or decision in principle. So you hear this terminology all the time, AIP, DIP. This refers to agreement in principle and the decision in principle. This takes between 1 to 2 weeks. And once the lender issues the AIP and DIP, and then we will collect all the formal documents from you according to the lender's requirement. We'll package the application and send to the lender for the underwriting. When the lenders after the lenders underwrite your documents, they're happy with your circumstances, they will instruct the valuation. And when they receive the valuation, they're happy with the valuation, the figures and everything. Then we move on to the 3rd stage, which is offer. And then your solicitor will work with the lender to complete the purchase. So there are 3 stages. And normally, as I previously mentioned, the whole process will take minimum 3 months. So do plan ahead. If you do want to get a mortgage in the UK, do check your completion date. Make sure that you have sufficient time to process mortgage. So what document would you need to apply a mortgage in the UK? We'll need the information about yourself. So I will give the full details in the next slide. And we'll need the security information. So we need your sale contract. We need the contact details. Who shall we contact for the valuation? Who shall we contact your solicitor? And also we need to make sure you have the source of deposit, the evidence in place, the bank statements or a solicitor letter to confirm your deposit has paid to the direct developer. So for the borrower's personal information, we will divide into 2 categories of the borrowers. If you are employed, you're working for a company, you receive pay every month, you will provide a passport, and secondly, proof of address for where you live. Normally it's utility bill or bank statement. And we will require your pay slip. Some lenders require 3 months, some of them require 6 months. And it will also require your personal bank statements showing the salary credits. Some require 3 months, again, some require 6 months. And we also, some lenders will also require your tax return. Not all lenders would ask for it. And lastly, we need to see the proof of deposit if they are not in the UK yet. If you are self-employed, apart from the documents listed under the employed sector, you also need to provide your, if you are trading as a limited company, we need to see the latest company financials. We need to see your company bank statements as well. But again, the lenders will have different requirements, and we will advise you accordingly. Okay, so people asking me, so what do we need to prepare before applying a mortgage in the UK? And I would say having the right mindset. I put on 2 screenshots for the latest news from actually a couple of days ago, a week ago. Just give you a sense what happens to the mortgage market right now. We are in a very challenging environment right now due to the COVID-19. Some lenders withdrawing the high LTV loan-to-value products. These days, the maximum loan-to-value for the overseas borrowers probably is capped at 65%. Some lenders still consider 70%. However, once after the valuation, most likely the loan to value will be reduced accordingly. The interest rate starts from 2.99. You probably will be able to get still get a cheaper rate under 2%, but you need to have a really, really good income and financial circumstances, high net worth, own the properties in the UK, experienced landlord, or own the properties in Hong Kong, etc., for you to get a really good interest rate. And plus, you probably need to place enough deposit with the lender as well. So I would say have the right mindset, budget well, be prepared. Down value is happening left, right, and center these days now. The valuation comeback is under the purchase price. So just make sure that you have the budget aside for extra deposit you need to put down. Okay, so this is all for me today. I'll leave my contact details to Gobi at the end of the end of the meeting today. And if you have any questions, please do come and contact me, and then we will talk further. Thank you very much.